If you own voluntary term life insurance at your employer, you're probably paying too much. This is Michael Gerali with Healthcare Genius and Bespoke Retirement Advisors. And we recorded a longer version of this, but I wanted to do a more condensed version of why we think you're paying too much and some solutions that might be available to you. So please subscribe below and we'll get started going through everything here. So basically, if you look at so again, we do believe doing research, and really this came about from one of our clients. We had a client who had a policy with one of our employers, and she asked, she was turning 50, and she said, is there anything I'd like to have some insurance for the rest of my career, at least for a longer period of time, and I don't anticipate working, much more than 5 or 10 years. So, is there anything out there? So we did some research for her, and lo and behold, you'll see what some of our findings were. Um, and again, the whole purpose of this is we don't want clients burning money. Um, we'd rather those dollars stay with you. So, just a quick overview again for those of you who may or may not have group voluntary term life at your employer. Typically, it is guarantee issue to a certain amount. So, for example, you might have 100,000 for an employee, 50,000 for a spouse, and 10,000 for children. That's normally only available when you first are employed and offered the coverage. Not always the case, but in most cases. The premiums increase every 5 years. So if you buy it at 34, you're going to get a rate. It's probably going to change at 35, and then again at 40, 45, etc. Some policies have portability. So again, with this client of ours, that was the real issue, is that she wanted to take it with her. Her company didn't offer portability. The insurance company didn't. So, but some do. However, most people are not aware of that. And that's essentially where you're going to take the term policy with you, but it's going to still continue to go up. And then some policies have conversion options where you can convert it to a permanent policy. Those tend to be very expensive. Um, so there's a couple of alternative options out there. One is what we call instant issue. There's no blood, there's no urine, and there's no medical exam. You're going to complete an online application, and the insurance company is going to look at that. And within about 10 or 15 minutes, they're either going to approve you or decline you. So it's a really a quick way to get coverage. Now, traditionally, you're going to pay a little more for this because of that fact. But it is one option. The other option that we see out there that's quick to issue is accelerated issue, where again, no blood, no exam, and no urine required, but it can take a little bit longer because they reserve the right to go back. They may ask for medical records. It's all going to be dependent on what you fill out on that application. So those are two ways that you can get insurance today without having to do an exam or again having to give blood and urine. Just a couple of quick examples. So I wanted to look at a 30-year-old and see how this applied, and then we'll show you the 50-year-old client. Um, we looked at two ratings. We looked at a preferred rating, and then we looked at a standard rating. So on the instant term for a 30-year-old, if they were going to buy a 30-year guaranteed level premium product outside with either that instant or the accelerated, their preferred rate would be 64.50 over that 30 years. So that's the total. So it's a 62% savings over what we see with the group term, which would have been 16,950. If they were standard, it was more, it was almost double what the preferred was, but it was still less than what we saw on the group term life. And then we go over to the accelerated, and it's about $500 less over that period of time, so about a 65% savings. And then for the standard, it's about 2,000 less, or a 35% savings. So pretty significant over what a lot of people are paying with their employer coverage. And then if we looked at the client, the 50-year-old, again, she wanted to make sure she had coverage well into her 70s. This would guarantee her coverage through age 79 or age 80. And you'll see here that it's significant. Um, for preferred, it was a $26,000 premium over that 30 years, or a 76% savings over the 111,000 that was on the group term. And then same for the stand or for the excuse me accelerated, was even more. It was 82% savings there. So just looking at some of those numbers, you can see that there are some significant cost savings. Now, we do have a life insurance challenge. We'll have this down at the bottom, some links to this. But what we always encourage people to do is, don't take our word for it. Look at it for yourself. So we've got the first place is a link, also a QR code for you to calculate what you might need for life insurance. We get asked that question a lot of times. And then the second one is the actual accelerated term link to be able to run a quote for yourself. We typically encourage you to run both that, again, preferred and also standard, just so you have an idea of what the range is. And we would like you to post that if you don't mind, post your results and see what it compares to your current coverage, group coverage. And then a couple of other resources here. One is, how life insurance can power your retirement. We co-hosted this with Tom Hegna, who's one of the world's leading economists. We also have a link to additional sites where you can quote life insurance. So we have that instant term in there, as well as some whole life coverage, and then our contact information. So again, Michael Gerali with Healthcare Genius and Bespoke Retirement Advisors. We hope you found this valuable. Thanks. Have a great day.